lot, Amnish, for joining in. You might want to, stay on to listen into this conversation that we're likely to have with the management of Medplus Health Services. The first management on the show today, Premji invests in SBI Mutual Fund yesterday, divested about 6.6% stake in the company for about 550 crore rupees. Remember, the company has reported a good set of second quarter performance. So to discuss this and more, we do have Madhukar Reddy, who's the MD and CEO at the company, joining in. Thanks a lot, Mr. Madhukar Reddy, for joining in. We'd like to ask of you, these institutions who are selling stake, who's on the other side, who's on the buying stake, and whether with the prospects of the company looking so strong, you yourself would want to, increase your stake in the company further as well as these institutions offload some of the stake that they have. But that depends on how the fundamentals of the company grow. So let's talk about the fundamentals of the company itself. Two things that really stood out. One was, the overall margin profile of the company improved, and that was in congruence with your own private labels improving. You had earlier in the past indicated that, private labels should be about 25% of your overall GMV over the next couple of years. What's the differential in margins between private label and the regular products that you sell? And where should margins settle at once you reach that 25% mark for private label?
Yeah. So as you all know, private label is what makes retail tick. And it is actually no different in retail pharmacy also. To us, we are already at the 24-25% GMV, but that includes both medicines and non-medicines combined. So if you only take medicines, which is what I was talking about earlier, by volume, we should probably be at around 16.5% or something like that. I expect we'll continue to grow at the rate of around 1% by volume, which is on the MRP basis every quarter. And that basically adds roughly around 15 basis points to our overall margin. So I expect that we'll continue to do this over a period of time. And it'll be a slow but gradual growth because I think we already have the early adopters in. A lot of people, we started our private label in Medplus only last year. And since then, we have gone from almost 0 to 16.5% on volume basis. So while there is growth, it's going to be slightly slower, but it is going to be inevitable.
So just a back of the envelope calculation out here, 1% increase in private label medicine volume adds 15 basis points to margins. You are at around 17%. You intend to be at 25%. So that's about 8 percentage points. If you back calculate that, the net impact of margin should be a positive 1.2%. Should we look at it that way?
Absolutely. It'll happen though over several quarters. But that said, I must say that unlike normal retail, grocery and other retail, there is no real cap on the amount of private label you can actually do in medicines. If you look at the US markets, US FDA will tell you that 91% of all medicines sold in US are generics. And by generics, it is private label of some store or the other. So if you go to Walgreens or CVS or any of the other stores out there, they'll either give you the innovator product or they'll give you a generic. And that generic is the equivalent of what we are doing right now, the private label. So, the one differentiation I'd like to make is when you, let's say, go into a grocery store to pick up a store brand soap or something like that, there are some people who will pick it up because, it is inexpensive and they believe it is the same product anyway. But a lot of others will have some brand loyalty, and that is because, the brand itself may have some kind of a unique thing. It could be a fragrance, it could be a texture, it could be some other quality which you really like in that particular brand, so you're not willing to switch. But unlike that, medicines have no such difference. A 650 mg paracetamol is 650 mg paracetamol. If it is made in the right factory and to the actual standards, it should not be any different at all. Hence, you don't see any cap in the private label. It's just that people have to accept that it is the same quality, and it'll take a little while. So while I say the near-term target for us is 25, the long-term target could be anything.
Okay, all right. Hi, Mr. Reddy. Good morning and good to see you in. Just a quick question on the shareholding pattern. What is the feedback? Last few months, there's been a lot of action. One big shareholder getting out, another one coming in. Do you think for now, all those big shareholders are satisfied who are left and who wanted to leave, they're out? All the clean-out trades have been done?
I think so, but I wouldn't really see it as a clean-out. I think it is one type of investor giving way to another type of investor.
True.
We started the company in 2006 and we have had several sets of private equity investors. And the last two private equity investors, which is Premji Invest and Warburg, they entered the business in 2017 and 2019, 2018 and 2019 and 2021. And their mandate was to basically take the company public and find an appropriate time to exit. So they have done their job. They helped the company through our growth process and everything else and all. And now I believe it's time for the public market investors to come in. And I think we have had the guys who actually replaced them are excellent, partners to have. And I feel obviously very happy to have these guys next journey.
All right. Mr. Reddy, we have our ear to the ground, but always better to clear these things, because sometimes shareholders are wondering whether it's an opportune time, but if there's going to be another big shareholder who's going to come to sell, then they just delay their purchase of the stock for a bit. Let's talk about business though. Your store addition, I think for this year, you'd scaled down to around 450 odd. What's the current target for this year? And for FY26, you get back to that 600 odd mark. Also, with this shift in private labels, what does it mean for your working capital?
So, two things. We have already announced that we'll do between 400 and 450 net stores, so that's on. We lost a little bit of time in the first quarter because of elections and a couple of other things out there, and we are not really now eager to make up for that. So that will be felt this year. But next year, as you said, we'll most likely end up going back to the 600 stores. On the private label side, well, in the long run, because private labels actually cost a lot more to actually purchase, it'll be a positive thing for the working capital for us. The thing is, it is too early, because right now we have got both the brands and the private label. So it is, in fact, have actually bloated our overall working capital out there. But as we go forward and as it becomes more clearer on what we need to stock and what can't be substituted in the brands, then when we know that, we'll probably stop stocking the rest, and private label will take the position of those. And given that private label costs a fraction, 20% of what the branded things cost, I expect the working capital requirements will come down significantly.
All right, quickly before we let you go, sir, running short on time, the smaller part of your business, the diagnostic business, you've said that you won't invest any more money into this. For the last 2 quarters, it's been a bit positive. What is the likely run rate which is sustainable here?
It is still at a very early stage, I would say. It is still growing. Right now we're doing around 27 crores a quarter, so that's around 108 crores per year kind of run rate. I expect we'll continue to grow here. We'll see, how much. We can't really commit that number, but I expect it's still in the early stages. And we still, as you know, it's a different model. It's a subscription-based model. On that count, we still don't have the number of subscriptions we wanted. So we're not going to go and basically expand immediately on that side.
All right, Mr. Reddy, great conversation as always. Thank you very much for joining us. It's a pleasure having you with us here. That's the management of Medplus. I think